First of all, I think we know that in India there is a massive underpenetration of the Indian market with not enough airplanes. We're a country of 1 billion people and we have less than 400 commercial planes in this country. So for us, we see that for the next several years, demand will be outstripping supply, and therefore we needed to come and bring in more capacity. So we've just ordered for 250 airplanes over and above the 180 that we are going to get delivery from at the end of this year. And this is our commitment for the future of India.
And surely after placing this huge order, you must be having some big expansion plans in place. So can you tell us what are the expansion plans, and out of these planes, how many will go for sale and lease back, and how many will be used by your own company, IndiGo?
So all of the planes will be used by IndiGo itself. And secondly, the expansion plan is actually just to cater with what the growth story of India is. If you see from a 10-year period from, let's say, 2004 to 2013, passenger numbers or RPKs grew at 1.8x of whatever the GDP was. So we clearly see that there is a correlation between what the GDP growth is and what it translates to in passenger numbers. And we are here to make sure that for the next decade, IndiGo is party to that growth story of the Indian aviation.
You have around 35% of the market share at this moment. With these planes coming over the next few years, what kind of gain in market share you see for IndiGo?
I think we are now about a little over 38%. But market share is not something that we normally target, or that's not what is on our target list, because market share is actually a pretty simple thing to do. You can drop fares and you can fill up seats and the market share will go up. So and therefore you often see airlines dropping fares and throwing away seats into the market. Load factor goes up, their market share goes up, but it has an adverse impact on their financial health. IndiGo is more about sustained profitable growth. And as long as that growth comes with profitability, then that's what we're chasing. Growth for the sake of growth or growth for the sake of growing market share is not something which is on our radar.
So you have planned around $500 million IPO, valuing the airline over $4 billion. How confident are you about the valuation, and how have you come to this valuation, $4 billion?
Actually, we have not come to the valuation at all. These kind of numbers are speculative, and they are out there in newspapers and things. The valuation will be whatever the market decides it to be. What we are confident about is that this is a well-run airline. It has got experienced promoters. It has got a phenomenally productive and enthusiastic team. We're one of the best companies to work for now in India for 8 years in a row. And finally, it has a track record of showing great financial returns, and we've been profitable since fiscal 2009, and so it is no longer a once, it happened once or twice or thrice or 4 times or 5 times. I mean, this is something that we have built up, and that track record will, I think, give confidence to investors.
SEBI had raised certain queries on IPO. Have you replied to these queries, and if you can share with us what kind of queries those were?
So after the DRHPs filed, the Securities Exchange Board of India raises various questions, comments, and that's the usual process. So yes, we did get some queries. We've already replied to them, and I think the process is that for those responses again to go up on the SEBI website, which I'm sure and they will be doing shortly. So nothing that was out of the ordinary in that process.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.